Good morning. The market price of one Bitcoin is just under $100,000. This is a map of electricity costs to produce one Bitcoin from countries around the world. These electricity prices are based on residential electricity costs, not industrial. Industrial is more expensive power, but you can buy more of it. So Bitcoin mining farms are typically billed at industrial electric rates, which cost more. But here are some takeaways. For any country on this map that's colored blue, the cost of electricity to produce Bitcoins is far below the market value of the Bitcoins. Deep blue is where the profits for Bitcoin mining are potentially very large, on a sliding scale up through orange and purple, where the costs of electricity are very high. And so Bitcoin mining is likely a money loser in those places. In Ireland, the cost to mine one BTC is over $300,000 compared to Iran, where it's $1,324. A Bitcoin miner in Tehran is 240 times more profitable than one in Dublin, and he could mine 42 Bitcoin for the same energy cost. One Bitcoin requires 6.4 million kilowatt hours electricity, and a solar miner using the machine would take almost 12 years. Here are the top 10 places where it makes little economic sense to mine Bitcoin. And here are the top 10 countries where it makes a lot of sense to do so. A quick disclaimer here, which is that Bitcoin occasionally does a halving. A halving will cut in half the number of Bitcoins that can be mined with a given amount of energy. This means that after each halving, each new Bitcoin costs twice as much in energy output. And they do this to place new limits on new Bitcoin supply. To turn electricity into Bitcoin, you need a device like these. These are called mining rigs, and the rig models were ranked here as the best performing and most profitable. Two rigs here are from Bitmain, one from Cane and Avalon, and two models from MicroBT. All of these companies are from China. Bitmain is out of Beijing, MicroBT is from Shenzhen, and Canaan is based here in China. These companies have sales offices across the world, but the machines are built here. These are the most widely used machines, and they're all made in China. China dominates the manufacturing of the machines used in crypto mining, and 98% of the computer chips used in crypto are made in China. The hardware for the global crypto industry is built here in China, in other words. The rigs and the chips are all from here. We have then a map full of blue countries that are natural resources economies. They are energy rich, and mining Bitcoin would be to their economic advantage. They would turn to Chinese industry for this part, not only for the mining rigs, but on the electricity generation and transmission. And Chinese companies have most of the world's market for that equipment now. What is lacking, though, is a marketplace where the Bitcoin can be easily converted into other global currencies and easily used to buy tangible products. That's where Hong Kong comes in. Hong Kong will be a global hub for cryptocurrencies, but not in the way we understand the term to mean. Singapore, for example, wants to be a cryptocurrency hub for family offices and investors and speculators. But China's ambitions for Hong Kong are much bigger than that. Hong Kong will be the trading center for the world that wants to use crypto instead of dollars or other fiat currencies to do real buying and selling of real products. And Hong Kong's financial center will be completely removed from the American and European banking systems. So operators in Hong Kong will be totally outside the oversight of swift regulators. Consider then this headline from just a few days ago. Russia is dark blue. A Bitcoin is worth over $90,000, and in Russia the cost of energy to produce a single Bitcoin is under $40,000. Let's also assume that a Russian energy company can produce electricity at even lower costs than what they're charging for residential users. Then we've got this. A Russian liquefied natural gas company filled up a ship, sent it out for 4 months looking for buyers for the LNG, and the buyers never came. There is high demand for liquefied natural gas, but the potential buyers were scared away. Washington and Europe went to sever Russian energy flows to Europe, and so everyone involved, buyers, sellers, ship chartering companies, banks, insurance companies, nobody wants to touch it. To the Russians, would it not make more sense in the future to just turn that LNG into electricity and then into Bitcoin? Isn't it safer than to run the risk of having a ship seized as it pulls into port, or after the LNG is unloaded, that the funds are frozen by Western bank regulators? Russia then is expanding its Bitcoin production and using Bitcoin to finance purchases. The Russian legislature changed the law that now allows their companies to buy and sell, given that foreign banks are so reluctant to handle transactions for them. Russia is already a leader in the mining of Bitcoin, and they want to expand it further. But what Russia needs now is a financial hub that will accept Bitcoin and where Western regulators can't see what they're doing. And it is helpful that Hong Kong is right next door to the world's factory. And this is what our officials back home have already figured out. Hong Kong is becoming a hub for sanctions evasion. U.S. lawmakers want the Treasury Department to figure out what to do about the Hong Kong problem because it's now a hub for U.S. trade violations. Hong Kong is ideal for front companies who buy Iranian oil and for the exports of restricted technology to Russia. Their research shows that about 40% of the goods shipped outbound Hong Kong to Russia last year were high priority items such as semiconductors. So Hong Kong is already a serious problem for U.S. state and commerce departments who want to restrict Russians and Iranians from buying and selling. And Hong Kong is a serious problem for U.S. Treasury officials who want to regulate the banking systems. But for lots of countries on this map, Hong Kong is the solution to all their problems, and for those same reasons. So taking all of this in from the bird's eye view, 30,000 feet, China wants to turn Hong Kong into the most important financial center in the world. The BRICS countries need to do more of their business outside the US dollar because high interest rates back home make the USD so expensive abroad. But they also hope to do more of their business bilaterally and outside the Western banking systems. Russia, Iran, Venezuela, and other countries are deeply motivated to use Bitcoin for use in actual trade, not for speculation, but in trade, because for them it's literally like printing money if they can find somewhere that can accept Bitcoin and turn them into actual product with no questions asked. Chinese factories want more business, and if their banks, which also operate in Hong Kong, can accept Bitcoin, they can open up their markets to giant parts of the world that don't have a lot of US dollars to trade, but that can mine Bitcoin instead. Chinese companies that build electricity gear, the capital equipment to produce electricity, they would certainly benefit, as would the companies that build the Bitcoin rigs to turn electricity into Bitcoin. Setting up Hong Kong as the hub for all of it closes all these loops for everyone. It solves everyone's problems for scores of countries outside Europe and North America. And for China, there's another benefit. Hong Kong is considered offshore, even though it's separated from mainland China by a pedestrian bridge that takes about 5 minutes to walk across. Hong Kong banks are set up so Chinese companies can freely buy and sell, but without exposing Chinese currency, the renminbi, to overseas speculators. China can use its offshore renminbi and its US dollar reserves to lubricate the merchant trades and overnight lending markets, and nobody outside Beijing or Hong Kong would have any idea how much business is even being done there. We wouldn't have a clue. There are many articles, good ones, about how there is a race on between Hong Kong and the other financial centers of the world to attract crypto investment, and how some of the nuts and bolts are coming together. But we need to be very careful to read them in the proper context. For example, Hong Kong recently announced changes to the tax code which would scrap the taxes on gains from cryptocurrency trading. The proposal to abolish the tax comes amid increasing competition with rivals Singapore and Switzerland. See, most of the articles on Bitcoin and crypto are written for Bitcoin investors and miners. And so the focus is on how friendly governments are, how the laws and regulations and tax rules support Bitcoin mining and speculation or not. But China wants Hong Kong and crypto to drive real economic activity, not merely speculative investment. The capital gains tax in Hong Kong was a problem for hedge funds and family offices, it's true. But it was a much bigger issue for companies that just have Bitcoin in their accounts. Market moves in Bitcoin need to be reported on company reports as mark-to-market gains. And if Bitcoin goes up, that previously was a taxable event for BTC held in companies' operating accounts. So that needed to be changed. Here's a recent chart of Bitcoin, and we can see the problems for a company that does a lot of buying and selling, actual business, using Bitcoin, and now they have a big taxable gain at their banks. Then next quarter, BTC may go down, and they have to file new tax forms to claim capital losses. It's just a giant accounting hassle. So with this tax reporting change, those problems go away. This tax change doesn't have to do much with competing with Singapore or Zurich, because that's not a race China is even running. They're making Hong Kong the financial center for the entire world for the companies who buy and sell actual products, for the companies who need the lowest prices and with the lowest risk. And those companies are coming to Hong Kong, all of them. This is Qingdao, Shandong province, just behind me. Be good.